Hi, Ron Benning here. For the past few years, most of my videos for investors looking to buy have been focused on finding and buying properties with immediate cash flow. Have you ever heard the saying, one man's trash is another man's treasure? Well, California rent control laws have created a second hidden way to make a killing on properties that nobody else wants. And the best part about this is I have a system to help you find and analyze these otherwise hidden properties. In this video, I will lay this strategy out in detail and go over the pros and cons of this strategy. I will also show you a couple of real examples, including a property that I currently have in escrow using this strategy. Please subscribe now to my channel so you won't miss any important updates. So, what's the catch? This strategy is perfect for people who are willing and financially able to trade short term cash flow for a substantial amount of equity in a time period of between 6 months and a couple of years. Let me go into the details. When it comes to pricing income properties in rent controlled areas, the properties with the lowest GRMs provide the best cash flow immediately, but actually set the top of the market as far as sale price and comps. Because of California's rent control laws and the assumed difficulty in raising rents on properties with rents well below market, people avoid these properties like the plague. My weekly GRM reports are full of these properties that nobody wants. They'll have GRMs at like 13, 14, 15 times rents, and most have been on the market for more than 90 days. Here's the part that most people don't understand and cannot easily see in a GRM report or an MLS printout. Some of these properties are priced $50,000 to $100,000 less than other properties in the same areas with better rents. And here's where the opportunity lies. Let me share a couple of examples here. I recently put a fourplex in escrow where, as you can see, the GRM at the list price of $775,000 was 13.04. Not quite a break even, but not completely horrible either. All units are on a month-to-month tenancy and eligible for immediate maximum rent increases. We made an offer $25,000 lower than the asking price that was accepted. After a visual inspection, we decided to take the property as is and renegotiated the price down to $735,000. The rents on the building are $1,286, $1,075, $1,400, and $1,193. A conservative rentometer estimate came in at $1,643 a month per unit. Now, by looking at the rental opportunity report here, we can see a monthly rent value add potential of $1,618 a month. The new owner will have several options to get the building performing better. At the very minimum, each of the units could get a maximum rent increase for the year, which is 7.7%, which would increase the income by $381 a month within 60 days. And within a few years, by doing maximum increases, the units would get to fair market value. Now, keep in mind, in this example, the price is at least $100,000 less than similar units with better rents in place. So the discount way more than makes up for the short term cash flow loss. At least two of the units need to be updated. There is a provision in the rent control law that if a unit needs more than a superficial remodel, that the unit can be vacated with relocation assistance. You should read the rent control law thoroughly and understand all the for cause and no cause reasons that you can vacate a unit. You should also seek guidance from a reputable attorney as to the lawful ways to vacate units. You don't want to make any mistakes in this process. Look in the description for a link to the current rent control law in its entirety. I really highly recommend that you read it thoroughly yourself. It's actually less complex than most people would think it would be. Under no circumstances would I take the unit out of rental service. because if you choose to use that method, you cannot re-rent it for a year. A tenant can be offered a voluntary relocation assistance, even if you do not want to remodel the unit, but you can't force them to take relocation assistance if you're not remodeling. Having said that, often the tenants are open to the idea of relocation assistance. When we did our walkthrough of the building, 2 of the 4 units were open to a relocation assistance offer for a few $1,000s each. Keeping in mind, we might be buying this building for $50,000 to $100,000 less because the rents are low. So even if we spent a few $1,000s per unit to relocate the tenants, it's still a heck of a bargain. Depending on how you get the rents up, whether it's quick or over time, at fair market value with the rents at $1,643 a month times 4, the gross income in this example is $78,864. Doing some quick math, assuming a new value at that point of $875,000, the GRM at that price would still be 11.09, a solid positive cash flow, even if somebody paid $875,000 for it, which is $135,000 more than we are buying the property for. So in this example, there is a spread of $140,000 in equity in return for my client will be spending some money out of pocket for some repairs and some short-term cash flow that isn't that good. For somebody with adequate cash reserves, this can be a great strategy. Now, I know some of you may be thinking, yeah, you did that once, but where could I find another deal like that? In preparing to make this video, I went in and I found another similar deal. If we look at 5519 Key and Crest, which is listed at $799,950, it has almost the exact same price and income numbers as this first example. If we look at some of the comps in the same neighborhood, there were properties with higher rents that sold for $895,000 and $860,000. So again, we're looking at numbers between $65,000 to $100,000 higher than the list price of this property. So this is an almost exact duplicate of the first example in both cost and opportunities. If this strategy sounds good to you, we can target these properties by looking for properties with GRMs above 12 that have been on the market for 90 plus days. Then I use our proprietary rental opportunity report to find the properties with the biggest rent value add opportunity. Then we will likely have to make multiple offers to find the motivated sellers to accept it. It's not easy, but it is possible, and I'm ready to get to work if you are. Look for a link in the description that says Get Started Now if you'd like to get set up and have me contact you. Let me know in the comments if you like this strategy or if you prefer the more traditional method of looking for immediate cash flow. Also, I'd love some input from you on what videos I should make next. Whether you want to buy or sell in the next 7 days or 7 months, I'd love to hear from you by phone or by email so that I can help you plan a smooth investment purchase or sale.